All right, welcome to setups where we learn to understand how to buy the market. And we are going to cover each and every single one of them one video at a time. So without being with that being said, let's go ahead and jump in with the first setup. So the first setup we're talking about is the most common setup, which is the double bottom where the market gives you two equal lows. Now, also, I do have the ultimate buying setup if you have not picked it up yet, where it has all the setup that you will learn to understand. So especially everything I'm about to go over now, you can have this just so you know it is on the Amazon collection. So if you didn't pick it up, I would advise you to go ahead and grab that because it will help you out a lot. But with that being said, first setup we're talking about is the most common one is typical double bottom where we have two equal lows. What do I mean by that? If you pay attention, right, the market came down like so, and then stop, right? And it goes up. And then it came back down, right? To stop within the same area where it stopped at before. So the moment it stops here, you will draw a line, right? So that line will be considered as your zone, right? So you put that line there for when market comes back to that line, that zone, you will look for it to do exactly the same thing as far as what it did last time, meaning it went down, right? You put a zone once it goes up, right? It goes up. You're going to mark this area because that's where it stopped at, right? When market comes back around again, right? You're going to look to the left, right? We look to the left. We're looking forward to see what it did last time. So we're going to anticipate for it to do the same thing. So when the market gives you the same thing, where you would take your buy to go up. So that's variation number one when it comes to the double bottom itself. Okay. So let's go ahead and jump into that real quick. I'm going to show you that same double bottom with more detail. That way you have a much better understanding. Okay. Here we go. So as you can see, we have a market that was selling, right? Giving you lower lows and lower highs, right? It was just falling. And this is where it stopped at. When market, the stopping point will be the last selling candle zone, meaning this is the last selling candle point where it closed at, and then the start off of the bullish candle, right? So I would generate a zone like so. As you can see, market went up, boom, like so. And then it came back to that same zone. When market came back to that same zone, which is the same one right here, right? Then we'll wait to see what it gives us based on what it did last time. And what we're looking for is for confirmation. And that confirmation, of course, is a price action, which would be the bullish engulfing. Now, in this example, we have two different variations of the bullish engulfing, where we have one where it took two bullish candles to engulf the last selling candle. So these right here would be your bullish candles, okay? And that will be your selling candle right here. So that will be your bearish candle, okay? So, but here we had a one candle bullish engulfing, or single bar bullish engulfing. Basically, it took one bullish candle to engulf the previous selling candle, and then you would pull the trigger. You would enter. You would click buy, so market could take you up on this journey up. But so this is the first variation, okay, of the double bottom. All right. There's not much to it. Now, just so you have a much better understanding of the double bottom, not just know it because I show it to you, we have homework, right? What you're going to do is, just like you did with your price action, right? Where you drew out the price action, I need you to do the same thing. I need you to go ahead and draw a small illustration of the double bottom. Now, if you choose to do it the same way that I did it, by all means, right? If you choose to do something like so, right? Let's just say you did something like that. Okay. Right. And then you generate your zone like so. If you choose to do something like that, and then you make this a bit, and then you do something like this, I'm okay with that. All right. Just make sure you give me all the information that I need to know about this, as far as this is a double bottom, right? We could just abbreviate as a DB, right? A double bottom. This is the first bottom, and this would be the second bottom, right? I need a line or arrow telling me this is where we looking to enter for a buy. So waiting for PA or waiting for price action, PA. This is where we would wait for the market to give us a bullish engulfing so we could take that buy. Very simple, straight to the point. But again, you doing this, once you do this, I want you to go ahead and take a picture of that and post that in Discord under the homework section. If you need a little bit more help as far as understanding how to do that, you should have the book, the Ultimate Price Action book. You will see some of the variation of double bottoms. And also, if you did pick up the Ultimate Buying Setup, where it has every single variation, all 67 variation of buying setups, it will give you some ideas. And also, you could see other people's work. That way, it can inspire you or give you some ideas of how to do yours. Okay. So again, all the information that I need. Now, as far as the other information that I need for that, I need you to tell me everything about this and, just a small little paragraph, nothing crazy. Hey, this is a double bottom where the market gives you two equal lows. And this setup will be based off the higher time frame. So let me go ahead and make that very, very clear also, even though I didn't mention that in the beginning. Every single setup that I'm going to go over will be based off monthly, weekly, or daily, meaning your technical analysis will be based off the monthly, weekly, and daily. Now, it may resemble the same thing in the 4 hour, because the 4 hour time frame, the H4, right? The 4 hour time frame is the time frame that we use to pull the trigger, meaning that's the time frame that we wait to get our bullish engulfing, which go hand in hand because we're waiting for the 4 hour bullish engulfing. Depending on where you at, it should be available to you within a 4 hour interval, right? 1509 or 1248 a.m. or p.m. Okay. So all that information, I need that. That way I know that you understand, not just know. Okay. So again, this is variation number one. All right. And then let's go ahead and cover variation number two. Okay. Let's see. Yeah, that should be pretty much it for that. So once this first phase is done, we'll jump in at the very end as far as what the homework that you need to do after you post in the first homework, once that's completed successfully.